Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. Well, as we know that the Nifty has actually launched its longest losing streak since its inception, 1996. Yesterday was the 10th consecutive session in which the Nifty logged losses and it closed at the lowest level since June of 4th of 2024 at 22,080 odd levels. Now, this actually represents a 16% plunge from its peak from September 26th that we've already seen. And just the 10 days of losses that we've actually seen have been the longest losing streak in Nifty's history since its inception as well. And in fact, when we've also seen that we're in now the sixth month, 5 months of consecutive losses have actually led to its longest losing streak in 29 years. Even though yesterday was still much better than expected because we managed to defend 22,000 for the second day in a row. And there is still a lot of volatility, a lot of fear as to how the global market cues will continue to impact the sentiments back home on the D Street as well. Remember, it was another down day for the benchmark indices on Wall Street as well, as Donald Trump's tariffs was definitely looking ugly with retaliation coming in from Canada, from China. Now even Mexico is thinking about the same. We did see that Dow Jones at about 50 points on Tuesday, taking the two-day drop to 1,300 points. The S&P 500 has given up all the post-Trump election victory gains with another 1.5% drop as of Tuesday. The Nasdaq was an outperformer, however, not falling that much, but ending with losses of about 0.4%. But Asian markets were slightly better off in the morning trading session. They're now again turning mixed. The sentiment is pretty volatile as there have been some hopes that there could be some breakthrough when it comes to the tariff talk, and there could be some kind of a rollback or a partial rollback, some relaxation that could come in. But that has really not come into the sentiment so far. We have been looking at our team, listening through all the statements coming in from Donald Trump as we speak as of now. But as far as the current statements go, so far what he has said is that it's the same things. If there are countries which are, taxing American goods or putting tariffs, it will be reciprocal tariffs that they will be continuing to put on all the countries, right? There's the same stance that Mr. Donald Trump has been continuously maintaining as well. Now, when it comes to the key, of course, sentiments as well as the key, things that you need to keep in mind for today. There'll be a whole host of stocks that you can definitely keep in mind of as well. Foreign investors have continued to remain net sellers. Of course, that's another cue. 9 consecutive session, they've offloaded equities worth about 3,400 crore rupees. Domestic institutional investors, they continued their buying spree for the 19th straight session. They purchased about 4,851 odd crore rupees in space as well. Another important cue that everybody should watch out for is that the NSE has actually announced that it will shift the expiry date for the Nifty Index weekly derivatives contracts from Thursday to Monday now. That will be starting April 4th. And this change will also apply to Nifty monthly, quarterly, half-yearly contracts alongside all other indices such as the Bank Nifty and Fin Nifty as well. This shift will also apply to all the F&O contracts, like I said, monthly, quarterly as well as half-yearly as well, which will now expire on the last Monday of the expiry month instead of the last Thursday. So there are these important changes for all the traders to definitely keep in mind as well. Back home, of course, a whole host of stocks will be important to watch, which we'll take along the way. But let's welcome our guest on board. We have with us Mr. Gaurang Shah, Senior Vice President of Geojit Financial Services, now joining in. Warm welcome to you, Mr. Shah. Thank you so much for taking the time out yet again to be with us. Again, an important day. Cues coming in from across the globe are going to be extremely important to track as well. What are you making sense of the Trump tariff talk that has started this trade war since yesterday? Will there be some respite? Will this escalate and intensify further? And what is the kind of impact that you're judging on India between all of this? So far, India has not featured in all the statements that have been coming in, but there could be a case where India will also be on the radar.
Thank you, Sakshi, for having me on this platform. Morning to you and to everyone. I think to decisively say that this is the final end of the triple T, that is Trump tariff trade war. It's going to be difficult, at least in the near term, let's face it, because he himself doesn't know what he's going to do next. So who are we to decide, to be very honest? Every morning we hear some new executive order being signed, some new thought process that has come to his mind overnight, and then in the morning he announces something. So, and he's himself said that till April, I think this will continue, and he's also mentioned that going into the future, if need arises, he's going to implement more tariffs on more countries or more items that come into US from the rest of the world. So it's difficult to say. uh, Mexico, Canada, China has already announced a retaliatory tariff on American goods and services that come into these countries. And my sense is that India is not featured here, but India's name has been mentioned, Bharat name has been mentioned in the speech that President Trump has mentioned. And reciprocal decrease in tariffs from India on certain items that comes into India from US has already been put in place. I believe Mr. Piyush Goyal, if I'm not mistaken, is already in US to talk about easing out the situation and creating more opportunities rather than putting hurdles into any kind of bilateral trade relationship. What has happened in Canada, Mexico, and China, especially, may turn out to be a little bit positive. But let me say this, Sakshi, that we are only talking about the countries on which US has imposed tariff. I'm quite sure and I'm very much confident that this will have its own negative impact on the US economy also. And the data
Yes,
points have
yes.
started to suggest that. So it's not that only rest of the world is going to suffer. I think US is also going to equally suffer. And US citizens will have to pay a higher price because overnight you cannot create a manufacturing facility or a services facility just in case, that statements made by President Trump, make MAGA, that is, make America great again. That doesn't happen overnight, Sakshi. It needs efforts and strategies and policies of years to put in place. So I don't think any promoter or any entrepreneur or any businessman would overnight fly to US from rest of the world and create their manufacturing or services facility over there just because he's the president for maybe a couple of years. And who knows whether he'll get selected next time or not. So that's a big question mark. We have suffered. I think we are possibly somewhere close to the bottom, at least for the time being. Uh, I'm very difficult for me to advise traders, but long-term investors, I think this is a perfect time to create portfolio.
If you're a long time investor, the markets have started to take as far as the pre-open is concerned, and we are at where we were fearing to be, 21,800 and below that, 1.3% lower in trade as far as the pre-opening trade is concerned. So we are at 325 points lower, but I think this should improve for the better. It's extremely volatile in the pre-open trade as of now. But actually, let's look at some of the stocks that will be important to watch, at least in the heavyweights. Let's look at Reliance Industries. Let's also pull up the banking counters, HDFC and ICICI Bank. We'll also look at part IT space, which has been pretty weak all across, to see how things are shaping up there. That's also important to watch out for. In terms of the key stocks, all of them will come up on your screens as the pre-open trade shapes in. But Mr. Shah, I also wanted to just get a sense. You're saying that, probably the bottom may be just nearing, near us at this point in time. And you're also saying that this will be the right time for investors to create their long-term portfolios. What is it that you're advising them? Should they go in with lump sum SIPs? Should they select key stocks, or average down their positions where they were holding on for their long positions? What is the right way to approach the market at this point?
Well, if you understand the market, honestly, Sakshi, come directly, invest in direct equity, provided you understand it and you have the reasonable knowledge about it, and more importantly, risk appetite. Then, keep large cap at minds, first of all. That's going to be the priority. Sectorially, certain mid caps cannot be ruled out. Small cap, micro cap, I think there will be still a little bit more pain. Whether to go direct or SI. I mean, SIP has always been a fantastic platform for wealth creation, and that is with 5 year, 8 year, 10 year plus kind of time horizon, and it has never failed. Just in case if you selected the right AMCs and the right schemes or the funds which they have introduced. Uh, Possibly, if you have a little bit of higher risk appetite, you can go for lump sum investment in mutual funds. Otherwise, if you're a small retail investor, don't have time, don't have understanding, don't have experience, have relative knowledge about what equity market is all about, then go for SIPs. I think that's been a great wealth creator. I myself do that as a disclosure. There are restrictions, as you know, for individuals like me to participate directly into equity markets. So I've been there, I've seen that, I've experienced it in terms of investing via SIPs into equity market. And I think that should be a good way to create wealth from a long-term point of view. And one more thing, Sakshi, I would like to add is that domestically, I don't think there is anything wrong in our markets. I'm talking about or our economy. The problem we are facing is all imported from, especially from US, with the kind of growth that we're having.
Okay, fair point. We actually have Mr. Donald Trump's bite, and which we'll like to show to all our viewers to really listen in as to what he has just said a few minutes ago to really understand what his fresh stance on tariffs is. Let's listen in.
If you don't make your product in America, however, under the Trump administration, you will pay a tariff, and in some cases, a rather large one. Other countries have used tariffs against us for decades, and now it's our turn to start using them against those other countries. On average, the European Union, China, Brazil, India, Mexico, and Canada, have you heard of them? And countless other nations charge us tremendously higher tariffs than we charge them. It's very unfair. India charges us auto tariffs higher than 100%. China's average tariff on our products is twice what we charge them. And South Korea's average tariff is 4 times higher. Think of that, 4 times higher. And we give so much help militarily and in so many other ways to South Korea, but that's what happens. This is happening by friend and foe. This system is not fair to the United States and never was, and so on April 2nd, I wanted to make it April 1st, but I didn't want to be accused of April Fool's Day. That's not, just one day cost us a lot of money. But we're going to do it in April. I'm a very superstitious person. April 2nd, reciprocal tariffs kick in. And whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth. Whatever they tax us, we will tax them.
Reciprocal tariffs kick in starting April 2nd for all those countries who charge us tariffs. It will be reciprocal tariffs. He did take the name of India twice in his comments. He did say that India charges us auto tariffs higher than 100%. He also said China's average tariff on our products is twice for what we charge them. And it's unfair, and we are going to be charging them the same amount. Let's get back to our conversation with Mr. Shah. Autos, probably the first sector that could feel the heat of tariffs on India, sir?
Well, I think you should have done it 1st April, right? It wouldn't be surprised, Sakshi. On a lighter note, I mean, why postpone it for 24 hours? Go ahead and do it if you want to do it. Anyways, autos, pharma,
he said I'm a very
specialty.
superstitious person and I don't want to be taken in for the Fool's Day. It's cost a lot of money to us, but still I'll go in about April 2nd. That's what he said.
Well, I will reserve my comments on that, to be very honest. So, autos, pharma, lumber, specialty agrochemicals. He's mentioned IT somewhere, if I'm not mistaken. So, I mean, boy, go ahead and do what you want to do. I mean, why keep the entire world on tender hooks? So April 2nd, so we have got one more reason for an extended market consolidation. That is the date that is mentioned, 2nd of April, reciprocative tariffs to kick in. We will levy tariff as much as they levy. So be it. I mean, and the problem is, who's going to be the end loser in this, Sakshi? It's going to be the common man consumer in the United States of America. Because eventually, if you cannot have a replacement facility, the consumer or the companies who procure all those goods and services from the rest of the world will eventually have to hike the cost, because you levy tariffs, the cost eventually goes up. Cost goes up. I think the biggest problem for US in the next couple of months mind you, I mean, I'm only being a little bit more preemptive. Normally, I don't do that. Is going to be a very sudden increase in the inflation level. And if that happens, actually, then
Yes.
Mr. Powell will have to possibly again, scratch his graces, look at the crystal ball, and rethink the strategy about rate cuts in the United States of America. So if that, I mean, it's a phenomenon. I mean, look, you play with something which you can control, right, Sakshi? You don't play with fire. You don't play with something which is going to snowball into a big, unpleasant situation for the entire world economy. So, I mean, let him do what he said he's doing, and then we'll see what is the end result of it. So, other countries will suffer, maybe be it India, be it China, be it Mexico, be it Canada, or be it South Korea, or be it any other country that is mentioned. But you are also going to be a loser in that. You're not going to be a winner.
Absolutely. So US itself will hurt itself while it's announcing these tariffs because there will be inflationary impact of these higher tariffs. And of course, there could be an impact on the economy and the GDP growth that could feel the pinch as well. And you rightly pointed out that the question will again come on whether we will have higher rates for a longer period. Then is that the situation that we are again looking at? So again, the situation of whether growth will suffer in all of this and economic growth at this point in time, will we be back at the same long haul painful inflationary cycle that we have to really see at this point in time? Any key concern of a recession emerging yet again if things worsen from here on, sir, globally?
I think too early to comment on that because these are just the initial stages of this trade and tariff war that we are facing.
Yeah.
If it has to percolate deep down and if it has to lead to trades getting restricted and countries thinking about themselves, then I mean, if you become a country centric, that's what I'm trying to say. If you don't open up to the world, then that may lead to a little bit of an ugly situation. But I think by that time, I hope wisdom and common sense prevails upon certain global leaders of developed economy, and this situation de-escalates rather than it escalating into an ugly situation. But my sense is, Sakshi, that after in all this thing, I think we as an economy, I mean, Bharat as an economy and as a stock market, relatively we will be impacted, no denying about it. But that impact would be on a little bit softer or lower scale compared to, Mexico, Canada, China, North Korea. Uh, that's my view. I hope I'm right on that.
Okay, fair point. We'll come back to our domestic markets then and to see where the opportunities are existing. I'll start off with your favorite sector, sir, and that's defense. That has finally shown us that, signs of bounce returning. There was given the exposure to the European markets and the kind of rally in the European defense counters are having, and the trickle down impact that we saw yesterday as well, a likely beneficiary or rather due to the sentimental impact, we saw BEL, HAL and the likes really rally in trade. So help us, understand, are you again very selective in this space right now? Do you believe that the worst is behind? How should one be approaching defense names? Many investors are still stuck at high levels. Best time to really look at them again and average down your positions?
So currently we have Cochin Shipyard and Bharat Electronics Limited (BEL) under coverage, but I think other companies, it's not a recommendation, Sakshi, but
Sure.
other companies are also quite strong and well placed, be it HAL, BDL, Mazgaon Docks, Garden Reach, BEML. Private players are also reasonably doing well. My sense is that, and I've already mentioned this, that defense, cap goods engineering, power, railways. These are four sectors which need 3 year, 5 year plus kind of time horizon. If you really want to earn a meaningful return out of your investment, don't think for 6 months, 1 month, 1 year, 1.5 year, 2 years. These are long gestation. Execution of orders take time. So, and these companies will be in the race for all the good reason as far as order book is concerned and execution is concerned. So remain positive on the sector. Unfortunately, don't have coverage on many as of now, but Cochin Shipyard and BEML is what we like currently.
Okay, fair point. Let's also discuss, some of the other pockets are there. IT is something that you also mentioned along with auto names too. What's your current stance on IT pack, sir? It's been a very, very volatile pack of late. It's showing us, at this point in time, some weakness too. Today it's a flattish opening as is being indicated in the pre-open. What's your current stance on this one?
So this is also one of the sector which may be impacted by what Trump is doing, to be very
Yes,
honest. Only time will
yes.
tell. We don't have clarity on that. But on the earnings front, if you ask me, I don't think there is anything to worry about. They have improved from what they used to do over the last couple of quarters. Outlook with respect to the future business and strategies concerned, post Q3 numbers was very, very strong. Uh, yes, a decent amount of contribution comes into the balance sheet from the US, but US is not the only country where Indian IT companies operate. They operate domestically as well as minus US rest of the world. Uh, and I would again repeat, if you want to do what you have to do, I'm talking about the statements made by President Trump, then uh, all this will have its impact on your economy and on your citizens also. IT is an sector which is relatively insulated with any kind of external disturbances. But when it comes to tariffs and trade wars and freezing your boundaries, then each and every sector will be a victim of whatever happens across the globe. We are positive on the IT sector. We like mid cap, large cap, and small cap selectively, and we continue to maintain a positive stance on the IT sector.
Fair point. Okay, we'll keep an eye out on that. Well, it's 9:15. Let's look for the markets to finally start ticking, and we'll look at a whole host of moves there. Probably 22,132. It's a good start, at least much better than what the GIFT Nifty trends were indicating. A 0.25% uptake, so it's a green start for the Nifty at this point in time. We have a 54 point of an uptick coming in. And let's also look at the Nifty Bank. That's also opening about 0.3% higher at 48,413. That's the level at which even the banks are moving in. Even the autos, despite the statements that are coming in, is showing us a positive start, 0.7% higher, 20,413. Pharma, however, is on the back foot. You have a 0.4% kind of a decline on the pharma pack at this point in time. Let's look at even the broader markets to see how they are also performing. IT is up 0.9% higher, so relief there after some days of a fall on that one. Mid cap index flat, although there was some recovery in yesterday's trade. It's holding up just above the flat line, and the small caps also on a similar zone at this point in time as well. Let's also look at some of the other spaces that are important to look at in terms of the key sectors as well as the stocks that are important to watch. Let's look at the heavyweights first. Reliance Industries. Let's look at that one. And because this has been a kind of a weaker link over the last few trading sessions, let's see how that one is opening today. Let's also pull up the banks then. About 0.3% higher, 1166 for Reliance Industries. Let's look at the banks. HDFC and ICICI Bank. The Nifty Bank is higher. And yesterday it was the PSU banks that were holding up. Let's see whether there is any kind of support coming in from the private sector banks. ICICI Bank is actually higher, about 1% or so. That's the kind of move that we are seeing. Even the NSE advances are higher than the declines at this point. 932 advances to 737 declines at this point in time. Let's actually welcome our another guest joining in on the technicals front. We have Arpit Beribal, analyst of derivatives at Wealth Management, Motilal Oswal Financial Services, to be with us. Warm welcome to you, Arpit, and good morning. How are you looking at the opening? Some sites of green are definitely more than welcome. With the kind of losses that we've been actually seeing in the markets of late. What's the suggestion that you've got? Will this sustain and recover and pick up from here on as well?
Very good morning to all. So if we talk about first Nifty, so if you see overall from last few weeks, the trend of the market has been totally in downtrend. From last 4 weeks, it is forming lower highs, lower low structure. And if we see the daily structure also, from last 10 days, it has given negative closing. And that has been one of the longest losing streak that we have seen in the recent past. Now, talking about the setup level wise, the supports are gradually shifting lower, and on the upside, the major hurdle Nifty seen is around 22,222 and then 22,350 zones. So, overall bias wise, if we see, we have seen a sharp correction of almost 1,000 points in the last few days from 23,000 to 22,000 levels, and now it is taking some support near 22,000 levels as per the option data. 22,000 is also a very key support zone. So, looking at the overall setup wise, some bounce can be seen, but the major level 22,350 would be a key level. A decisive close above 22,350 will only change the setup. Till the meantime, it will likely to be in a broader range between 22,000 to 22,300 levels in the meantime.
Okay, got that. Any key stocks that you'd like to recommend right at open, Arpit?
If you see overall, Sakshi, setup-wise, tourism and selective aviation stocks has been quite strong relatively. And if you look at the
Hmm.
chart of Indigo, so Indigo has seen relative outperformance in spite of market weakness in the mid cap and the small cap in last couple of weeks. The stock is holding very strong on the weekly and the daily scale. On the weekly scale, it has formed kind of strong bullish candle with long lower shadow. On the daily scale, it has given a range breakout above 4,600 levels almost after 2 to 3 weeks. And looking at the chart setup wise, I think definitely we can see good tick towards 4750, 4800 levels. So Indigo would be a first preferred pick within the tourism and the aviation space. So right now around 4635 levels. So with a key support of 4500, for an upside move towards 4750, 4800 levels.
Okay, fair point. Let's also look at some of the stocks that are, opening higher as well as on the lower side in trade today. Your Bombay Stock Exchange are slipping about 7% lower. Adani Wilmar is up by 4%. There is some acquisition news of tops that they have done, and that's also taking higher on the back of that. There are many other stocks like Signity Tech within the mid cap IT space that's actually up and about in trade. Strong moves that can be seen on this one. There are many other such stocks that are in focus. Coforge has, the firm has signed a 13-year partnership with Sabre for $1.5 billion. That's also up and about within the IT pack. But on the lower end, you also have Ola Electric. There is IFCI, which has issued a notice on missing the deadline of the PLI scheme for its Tamil Nadu Gigafactory. So that's again important to really look at. The pain continues for Ola Electric, although there is some uptick today, 1.27% of an uptick and a recovery on that front. And let's get back to our conversation with Mr. Gaurang Shah. I also wanted to get a sense on Ola Electric from you, sir. The stock has really been battered of late, and there seems to be nothing that's really going right at this point in time. For those who have been stuck since higher levels, those who got the stock after listing, I mean, this went up to what 90 odd levels, and from that time there's been a correction. How would you really explain the kind of moves here, and would you still be cautious on this one?
Well, Sakshi, so I think we discussed this even pre-IPO, post-IPO.
Yes.
We had mentioned that we had come out with a subscribe recommendation on Ola Electric from a long-term point of view, and that point of time we made it very clear that if you do want to subscribe to Ola's IPO, or if you want to get invested into Ola's shares, you need to have at least 2.5, 3 year plus kind of time horizon. With the current events which have unfolded, it looks like that 2.5, 3 year was less. You need to extend it more. And primarily the reason is and I mentioned about it, even during the IPO time, I think if I'm not mistaken, there was a loss of 1,500 crores, which has got a little bit stretched further. The bike that they were planning to launch has got delayed. The Giga factory that they were talking about, there is no positive news over there. 10,000 plus complaints in the consumer code and Consumer Court of India. And the unfortunate situation with the competition that is rising every day in the two-wheeler segment, especially for the EVs. I think they seriously need to think out of box to come out with some strong strategies to, pull up their socks, improve the financial situation, and more importantly, regain the confidence that is on the losing side from the customers. The best person who advertises for you or who promotes your product is the consumer. And if that consumer is not satisfied, then I think whatever amount you spend or whatever technology you put in your product, it is out of the window. So it's a sad story for Ola Electric. I don't know how it's going to shape up. I think today itself there was some report that whatever uh, situation that needs to be improved and whatever targets and timelines that have been set in place, they are nowhere close to that. So that's a little bit of concern. And my sense is that in the EV two-wheeler segment, you have much better established players than Ola Electric on which you can invest from a long term.
Fair point. Okay. Let's actually also look at a few other pockets. Oil and gas space, especially the OMCs, are also looking up at this point in time. Let's first take a technical view and then we'll come back to Gaurang for a fundamental view on that one as well. Arpit, HPCL, IOC, BPCL all in the fresh zone because the Brent crude has been falling consistently. There's also an expectation that OPEC and allies will continue to increase production as well. That will further lead to probably higher supply and cooling of the crude oil prices. How are you looking at OMCs? Good opportunity yet again?
So if we see overall the OMC price yesterday itself, it was showing some action. The market was dull, but we have seen good buying in the second half of the session, especially in HPCL. So if we talk about HPCL and BPCL chart structure on the weekly scale, it was from lower highs from last couple of weeks. But yesterday a good recovery was seen, a strong bullish candle seen. Today we have seen a negation of lower highs, and I think setup HVCL has been the strongest back within the OMC. On the weekly scale, is getting negative. The formation of lower highs above 325 levels, strong bullish candle, kind of bullish engulfing pattern. So definitely some uptick can be seen within this space, and HPCL would be a top preferred pick within the OMC pack. Right now it's quoting around 324, 325 levels. So definitely one can go long at current levels with keeping stop loss of 315 for an upside move towards 340, 345 levels.
Okay. Mr. Shah, what about you? How would you really look at the OMCs at this point in time, given the crude oil situation?
Well, crude oil is down. That's good news, to be very honest. But at the same time, under recoveries and issues related to inventories is a little bit of sticky situation. Alternative fuels, clean and green, switching over them will possibly lead to lower consumption as far as traditional fossil fuels are concerned, petrol and diesel, that is Sakshi. But we have coverage as a disclosure on all the three oil marketing companies, HPCL, BPCL, IOC. Divestment process, we have heard a lot. Unfortunately, zero activity at ground level right from the late Finance Minister, Mr. Arun Jaitley, to our current Finance Minister, Srimati Nirmala Sitharamanji. There have been mentions, not one, but one too many times about government reducing their stake, hiving off their stake, coming out with whatever follow-on offers or reducing the stake activity, but nothing has worked out. Good dividend-paying companies, all three of them, because government is the largest stakeholder. But there needs to be a serious thought process, and more importantly, I think bringing these two fuels under GST. Over here also, we've heard so many times GST Council meetings do happen. There is some thought process applied to it, but then at state level there is no agreement. That's the unfortunate part. I guess if once it comes into GST, then the situation may be a little bit better off.
Okay. Another thing that I mentioned right in my opening comments, we should just get that discussion going as well with NSE's announcement of shifting its expiry date for the Nifty index weekly derivatives contracts from Thursday to Monday. There has been a tit for tat kind of a situation so far between NSE and BSE, who will get the expiry done first and who will catch hold of more volumes. But with NSE now announcing Monday, BSE can certainly not go for a Sunday. What exactly are you expecting, Mr. Shah, the impact will be, and how are you assessing this for traders?
No, I would say go for Saturday and Sunday, boss. Why are you leaving out 2 days? Makers work 7 days a week, and nowadays there is a lot of talk about in the social media about how many hours you need to work in a week.
Yeah.
I'm far away from that, so I'm not a part of that debate. But I think shifting from Thursday to Monday and then BSE following, this may lead to a little bit of more highlighted activities actually, because Monday is the first day of the week post 2 days of holiday. And if anything unpleasant happens, then there will be one too many Black Mondays, as we call it, to see. So that's the unfortunate part. But yeah, nevertheless, I mean, days are days. You do it on Thursday, you do it on Friday, or you do it on Monday. I think go ahead and do it. What you want to do? I mean, what else? I mean, my only thing is that there are a lot of retail investors who are very, very naive, who have got sucked into this unfortunate dark hole called futures, options, puts, and calls. I hope there is some better situation for those people because 80-90% of them actually don't know what they're doing. That's the sad part.
Yes, absolutely. In fact, Arpit would be dealing with such people almost on an everyday basis as well. Life more difficult for analysts like yours, Arpit?
Absolutely, Sakshi. If you see since the time the last announcement was done, the closure of Bank Nifty weekly contracts and the other contracts when it got closed, so all the business got shifted on the Nifty platform and Nifty expiry, and there were huge swings, especially on Tuesday and Thursday of the month, because of the change in the expiries. And if you see, there's a lot of volatility that is increased in last couple of months, especially from the series of October till now. We have seen a very erratic move, especially on expiry days, and now there's a new change as per the NSE. So definitely they would add definitely some more volatility to this, and the changing days will definitely test the back tested data for the last couple of years. The strategy that were driven from last couple of years will take a toss, and now we have to see, we have to restructure it, reframe it. So definitely a lot of changes will happen going forward, and accordingly we need to deal with that.
Fair point. Mr. Shah, before we let you go, just the last word. How soon do you feel 26,000 could be penciled in again on the Nifty? Or is it just too far to be really looked at?
Well, you know me, Sakshi, for pretty long. I've been a most eternal, optimistic, positive person as
Yes.
far as Indian markets are concerned. We were used to high double-digit return right from 22, 23. That is 2022, 2023. First 9 months of 2024 from 1st Jan to September. Um, we have seen some brutal selling from the FIs from 1st of October 24. And honestly, I mean, 1st Jan till date, I think they have sold in excess of 1,25,000 crores already, Sakshi.
Absolutely.
So I remain positive. Whether we see it, okay, let me give you a view that I have. I think this market will possibly consolidate and try to find a base for at least another 3 months. Post June 2025, 1st July onwards, I think there will be some signs of recovery on the higher side. And if everything goes well, and by that time, all this, trade, tariff, war, Trump will be discounted, and we'll get back to business. Large part of it, whatever needs to be done from the US would have been done. Counterpart countries will do whatever they have to do. So my sense is July onwards, we'll have a little bit of more stability and more recovery coming in. What has been happened in the budget, I think that will also start
Yes.
percolating and translating into positivity from third quarter onwards. But we should be better off by the time we say goodbye to this year in December 25. Uh, Whether 26,000 or not, that remains to be seen. But we would be much closer to the highs that we've seen rather than being lower to the lows that we've seen.
Fantastic. Well, we do need such optimistic comments in this kind of market at this point in time, and that's why we request you to come more often, sir, so that you can actually give that positive vibe as well as insights to all our viewers, which have been being testing in these waters as well. But thank you. Always appreciate your time with us, with all your wisdom, sir, and hope you have a fantastic day and time till the right time we meet you ahead on Business Today Television.
Thank you, Sakshi. Wish you all the best. Thank you so much.
Thank you. And we'll continue our discussion with Arpit. Actually, it was a decent start and it's now getting better. Arpit, we have 22,200 on the Nifty as well, and the mid caps and the small caps are also providing that extra support to the market. So finally, we are probably not getting as scared with what Donald Trump's tariff talk has been. There is some recovery. But you will be able to tell us better whether this is a dead cat bounce or will this sustain actually.
Sakshi, if I talk about the overall structure that started right from the September series, last almost for 5 months, we have seen a very typical structure, in especially in Nifty. If you talk about Nifty structure, generally index correct by 1000 to 1200 points, then we see a bounce of 5 to 600 points, and likewise that the story has been from 26,000 to 22,000. In the recent fall, if you see, the corrective move started from 23,000 levels, and now it has made a bottom around 21,950 levels, and that has been last previous day. So after a 7 to 8 days fall, generally market bounces back or by 50% of its recent previous move. So if we see the setup wise 1000 points fall, and the next resistance comes up to be around 22,350 and then 22,500 levels. So generally after a fall, market bounces. So the bounce could be seen towards 22,350, 22,500 levels. But the real test would be around 22,500 levels, where the Nifty is able to surpass 22,500 levels on the closing basis. And if that happens, that will definitely change the structure for the medium term. But in the meantime, till it closes below 22,500 levels, so index is likely to be in a range between 21,800 to 22,500 zones. Whereas talking about Bank Nifty has been in a completely different zone. If we see about Bank Nifty from last 7 weeks, Bank Nifty has been trading in a broader range between 47,750 to on the upper band 49,500, 50,000 levels. Relatively, it has outperformed the broader market and the Nifty index because heavyweights like HDFC, Kotak, and ICICI are relatively stable. So if we see the recovery wise, Bank Nifty would lead the recovery as compared to Nifty. Bank Nifty major support is seen around 47,750, 48,000 levels. At the same time, 4900, 49,250 would be the upside resistance. So looking at the Bank Nifty is relatively better place. Nifty key level will be 22,500 on closing basis, and Bank Nifty key level will be on the closing will be 49,250 zones.
Okay, got that. Let's actually look at some stocks then. Any key stocks that have caught your attention, Arvind, as far as the mid and the small caps particularly are concerned? Any strong moves that could carry on the momentum?
So if you see overall very selective stocks has been in momentum, I would like to focus upon the summer theme as summers are picking up. So if you see the chart setup of Voltas and Blue Star, Voltas has seen a very good recovery from lower levels around 1200 levels to 1400 levels in last almost 1 week. See, if we see the setup on the weekly scale, it is forming lower, higher highs, higher lows in spite of market weakness, and it's given a range breakout above 1370, 1380 levels. So from the setup wise, Voltas can definitely head towards 1440, 1460 levels. So that counter is really looking very promising. Apart from that, if you see from the similar space, Blue Star. So Blue Star also, in spite of market weakness, Blue Star is consolidating in a broader range between 1900 to 2400 from last almost 7 to 8 weeks. On the daily scale, it has given a range breakout. On the weekly scale, it is forming strong bullish candle. So looking at the chart setup wise, definitely some room can be seen on the upside towards 2150, 2200 levels. So within the summer theme space, Blue Star and Voltas looks quite promising on chart. Apart from that, as we already discussed about OMCs, so Hind Petro we have already discussed, and looking at the setup wise, strong opening, and since then it has been moving higher continuously on the intraday charts also. So HPCL would be looking very strong for another 3 to 4% move towards 340, 345 levels, as OMC has been the flavor and definitely beneficiary of softer crude prices will definitely trigger the moment.
Okay, but I wanted to discuss with you on this capital market space as well. What is happening to BSE? Sharp cuts being seen on this one, and does it offer an opportunity to buy on the dip? Because this has been an erstwhile favorite within the capital market story. It has been a big wealth creator of the recent past rally that we have seen. But the sharp losses being seen off late, do they actually offer interesting value opportunities, bottom fishing opportunities to investors, Arpit?
If you see overall, the capital market space has taken a big hit in last couple of months, whether you talk about the exchange stocks or the exchange intermediaries. So particularly talking about BSE, if we see the setup wise, we have seen a decent cool off in the stock from higher levels, almost a correction move of almost 15 to 20% we have seen from the higher levels. So from the chart setup wise, if we see the rally where it started from around 3600, 3800, that rally started in BSE in the month of September 2024, and now it is back to that closing to that levels. So I think the next real test would be around 3800 levels, 3900 levels. At that level, what the stock really behaves at that point of time. On the daily scale, if we see, it is now trading near its 200 DEMA, and that also stands as a very important support zone. So I think so far it is forming lower highs on the daily scale, so it's better to wait for some recovery and a good closing. So major support wise, 3900 would be a key support level. On the upside, 4250, 4300 would be a key level. A closing above that will definitely can regain its momentum. Apart from that, if we talk about the capital market theme itself, if we talk about the exchanges stocks, the intermediaries, so it's like CDSL also, if we talk about the structure, the rally where it started from 1100 it started and moved towards 2000 levels in the month of December, and post that we have seen a vertical fall. Now it's back with major support zone. So I think 1100 would be a very important support zone for this stock, and at that level, how the stock behaves at that level would be a very crucial junction. So all the major capital and intermediate stocks are near its support zones, and next couple of days would be very much key level to look out of whether the follow buying happens or not.
Okay, fair point. We are actually seeing on the Nifty about 35 stocks of the 50 stocks that are in the green now. 22,200 has been crossed on the higher side, so that's good. Even the PSU names like Hudco, they are doing well at this point in time. There are several stocks. Let's actually look at the index contributors as well at this point in time on the Nifty. It's stocks like the even IT stocks like Infosys, ICICI Bank, Reliance Industries is now in the positive zone too. M&M, TCS, Bharti Airtel, HCL Tech, all of them are supporting. So the banks are higher. You have the auto space, some of them are returning to glory, and you're also looking at Reliance Industries coming back to support the market move at this point in time as well. That's a strong one that we're looking at. In fact, Indian hotels is something that you talked about, I believe, Arpit, and that's up by 1.5%, is doing very well at this point. So the tourism space is something that you highlighted right at the opening, is also doing well at this point. So 22,200 right now, where could this really take us to on the Nifty in the shortest period is what you expect, Arpit?
Sakshi, as we were discussing about the Nifty structure, so generally
Yeah,
the bounces happen on the 50% of the retracement of the previous downtick. So if we see,
yeah.
we have seen a almost fall of 1,000 points from 23,000 to 2,200 levels. And if we see, as per the retracement levels, 22,450, 22,500 would be a key level where the major resistance would be tested. So on the immediate basis, 22,222, where the index is trading, would be a key level to test for, and it's able to surpass and sustain over here at almost an hour or so. So definitely a move could be seen towards 22,350 levels. So 22,222 is on the immediate basis would be a key level, because the thing has been index was not able to surpass or hold for more than a couple of hours on the intraday basis in the positive territory. So today so far we have seen in the positive territory, but next 1 hour would be very much crucial whether the index is able to hold 22,200 levels, and if it able to hold this level, we can see a bounce towards 22,350 and then 22,500 zones.
Okay, got that. So higher levels finally could be coming in. We're already seeing a strong move of 130 points, 0.6% higher. And now about 41 shares on the Nifty are actually trading higher in trade. Of course, along with the pockets that I mentioned, OMCs, which we have discussed, are also something that is providing us some support. Even the Nifty Bank is higher by about, what, 200 or 300 odd points. So strong moves there as well. So the banking names are doing well. IT names are doing well as well. Within the banking space, Arpit, do you have any preferences? Private banks, PSUs, financials? How are you really approaching all these segments?
It's actually, if we see overall the financial pack, from last 3 months, it has been quite resilient. In spite of the massive fall that we've seen in the broader indices and the Nifty, but financial pack has outperformed. So starting with the financial pack, mainly there are three categories of financials: NBFCs, followed by private banks and the PSU banks. So our preferred would be definitely within the financial pack and the private banks. For the PSU banks, we'll take a cautious note as compared to the private banks and NBFCs. So talking about the NBFCs first, we have been quite optimistic on within the NBFC space. Our top pick is Shriram Finance and Bajaj Finance. So if we see the chart setup wise, both stocks have been quite outperformer. Market has corrected, but the stocks have seen outperformance, especially Shriram Finance and Bajaj Finance. So Bajaj Finance is trading a life high territory. Today we have seen some pull off from higher levels, but if we see the positional setup, it's very strong. Along with that, Shriram Finance also we have seen decent recovery from 550 levels to 620 levels. And the looking guys on the monthly and weekly setup, definitely there is some prospect that the stock is likely to outperforming coming quarter. If you talk about the private banks, so private banks, if you see Kotak, after a long slump period, it has started to outshine. So almost if we see from last 3 to 4 years, the stock was in a range between 1600 to 2000 levels. However, the setup wise from last couple of weeks, the stock hasn't fallen much and taking support near 1800, 1850 levels. So I think definitely slow and steadily move can be seen in this counter within the private bank space, and a main private bank, that is ICICI Bank. This is a favorite pick within the private bank space, a very strong outperformer or very good strong setup in all multi-time frame analysis. Major support around 1180, 1160 levels, slow and steadily towards, we can see move towards 1250, 1280 levels. So within the private banks, ICICI and Kotak would be a preferred pick, and within the NBFCs, Bajaj Finance and Shriram would be a preferred pick.
Okay. Along with banks today, IT, the other heavyweight space, is also supporting the sentiments. 2.4% higher for the IT index as a whole. Large and mid caps both are seeing a lot of gains here. Remember, there were brokerage houses reports on Coforge with higher targets. So many of them were already showing some signs even in the pre-open, and that's continued as well. Let's understand from Arpit where exactly is finding new opportunities. So you can actually see what Coforge is doing. 9.6% higher, 7906. After a long haul, we've actually seen such a sharp intraday move on Coforge. The glory days are coming back for IT names. Do you think, Arpit?
First, I talk about Sakshi in the IT index. If you see IT index, the chart wise, we have seen a correction move from 46,000 to 3,800, 38,000 levels. And if I look at the weekly setup, that comes out to the major support zone for IT index, and we have seen rebounded from that level itself. So mainly all the stocks, the heavyweight especially, has been a similar structure. So if we talk about heavyweights, Infosys seen a strong bullish candle forming a morning star pattern on the daily scale, negative lower rise formation. So looking at the setup wise, definitely a pullback move can give a good momentum towards 1750, 1760 levels. So I think Infosys, the risk reward is quite favorable. Turning from its major support zone of 1690, 1700 levels, slow and steadily move can be seen towards 1740, 1750 levels. Apart from that, one of the counters then from the mid cap space idea would be FSL. For so solution, if we see the chart setup wise, in the broader market correction also, the stock has been holding very strong, trading in a weekly range between 320 to 360 levels. And looking at the setup wise, a small follow up above 360, 65 can definitely trigger the momentum towards 370, 380 levels. So FSL within the mid cap space looks very strong, and definitely we can see an uptick towards 375, 380 levels in coming days.
Okay, fair point. Understood. So that's as far as the IT pack is also concerned. Where else are you looking at for momentum, Arpit, today? Is there anything else? Clearly seems to be a long day, I believe, on all the pockets. Anything else that catches your attention on the long side?
Sakshi, if you see over the metal pack, since our last discussion also, metal index has been quite resilient. Generally, if we see metal index is the first one to correct as soon as we see some tariff, but this time this structure or the price action is showing a different story. And within the metal pack, a JSW Steel has been a preferred pick a long time back also, and now also if you look at the setup wise on the weekly scale, it has been a rock solid between 960 to 950 to 980 levels, consolidating between from last 4 to 5 weeks. If you see the daily setup, it is on the verge of giving a range record about 990 levels, and definitely a closing above 990 can trigger towards 1020, 1050 levels. So within the metal pack, JSW Steel is a preferred pick and looks very strong. Apart from that, one more counter that looks good is Jindal Steel within the mid cap space. As you have seen some recovery in the mid cap and the small cap stocks, so Jindal Steel also a nice base formation around 860, 850 levels, a strong bullish candle, range breakout above 872 levels with good surge in volumes. So a slow and steady move can be seen towards 900, 915 levels. So metal space, JSW Steel and Jindal Steel would be a preferred pick within this space.
All right, Arpit. Well, time to thank you. But finally, after a long haul, you've also appeared on the channel, and we've seen some green return on the screen. So keep coming more often and keep bringing in some positive vibes right there, which is much needed at this point in time. With hopes keeping strong, you're looking at 22,350 and 22,500. We are keeping our fingers crossed to look at those levels as well. 0.7% of an uptick right now. There's 22,233, 150 points strong on the Nifty. So it's definitely a good start. Markets after those 10 days of pain that we've actually seen on the Nifty, the longest losing streak since the inception, since Nifty's own birth in the history of the Nifty that we saw up until yesterday. that seems to be now, at least being on the verge of being broken. In case that happens, that will only bring in some size of relief to the bulls at large. We'll wrap it up at that, but do stay tuned, viewers, throughout the course of the day. We are going to be tracking the market momentum for all of you. And of course, at 12 noon, I'll be back with daily calls where top market experts will guide you through all your stock market queries in this reversal in the trend that you're looking at. Should you be aggressive? Should you buy more? Should you average out? Any and all of those questions that you have, you can address it to top market experts to get a custom-made advice. Stay tuned on Business Today Television.
Welcome to Market Today on the roundup that's happening at around 11 a.m. about 1 hour 45 minutes from market open. We'll start with the Nifty, 22,082 for you, 36 points lower, and the Nifty Bank actually 159 points higher